Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, after 2 weeks of a roller coaster ride, the US dollar, which measures the greenback strength against a basket of 6 major currencies, dropped by 6% last week to a low of 106.12. This has initiated renewed gains on Friday for most of the currencies, and looking at the Australian dollar, we can see the market rallies higher and now reaches a peak around 67 cents. And also probably going to see a little bit more to this upside challenge, as I feel the market could actually reach 68 cents before turning around. Looking ahead to this week, we have the RBA minutes and also the Australian jobs report. And along with that, China's latest easing in coronavirus restrictions or lockdowns has actually eased some of the market's tension as well. Any pullback for the duration in the next 24 hours should find support around 66.60. And as I mentioned, I expect to see the market rally on to 67.15 to 67, 65 to 68 cents. The euro, as we can see, claims its target of 103 on Friday and holds above this region at present. We've seen a little bit of profit taking coming back into today's session, but overall the market is cheering after the US CPI or inflation number, which came out lower than expected of 7.7% in October, down from 8.2% in September. And along with that, the market is now pricing in an 85% chance of a 50 basis point rate hike in December on the 14th. However, we still have the Fed's December announcement. Along with that, the inflation reading for the US Labour Department and the monthly job report. So the market will be reading into some of this data before assessing the Fed rate decision. With an ADX trending, I still feel there is a little bit more gains to the upside, but I'll be getting a little bit cautious as we are overbought, and therefore towards the 104 area may see some profit taking after these strong 2 days that we've witnessed. Dollar yen has rapidly fallen over the last 48 hours, or at least the last 2 trading days, Thursday, Friday, and now finding a little bit of profit taking into today's session. In light of the pattern, although my objective of 143 was easily met, it now looks towards 136 as a next potential, due to the fact that the trend is relatively strong and therefore could see this decline. In the meantime, though, I'm looking at 138.60 to 137.80 as initial short-term support. And as I mentioned before, beneath there comes in around that 136 mid. Looking to the top side, resistance seen around 137.70, 90. Sterling, well, the market also claims its objective of 118 after the last 2 strong days that we've witnessed. Clearly, we've had a struggle to reach this objective. Nevertheless, I feel there is further upside to maybe 120, as the dollar could slip a little bit lower towards the region of 103. In light of the pattern, though, any pullback should find support around 117.65 to 117.10. Gold a little bit softer into the start of this week as the market eases back towards 1,759. But overall, though, I feel the market could eventually achieve its objective of 1,784 and reassess from there. As I mentioned, the weakness should find support around 1,754. Wrapping up with oil, the market is still very much focused on that top side challenge around 89, 75, 85, and maybe see a little bit of profit taking coming back into play here. But the restrictions of limiting the lockdowns, that is, in China, the market may actually stage a sort of a daring challenge and maybe reach the peak around 92, 93. Overall, though, I still feel the downside risk is still looming, so this could be a brief affair to that top side and see the market drop. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday port. I hope you enjoy the great start to the new week.